This is section A from the 2022 7127-1, paper 1, financial accounting. I'm going to start first of all with the multiple choice questions. So there are 10 multiple choice questions in each paper. First thing we need to know is the guidance about how to fill in the answer. So we're going to be choosing an answer 1 from 4. Correct method is to colour in the box. Do not do any of these. Okay, so I see often students that have ticked them or just put a little dot in, made it look like an eye. Presumably at some point somebody has put 3 little wiggly lines through it. I've never seen this myself. If you want to change your answer, put a line through the one that you've already coloured in and then colour in the correct one. If you want to return to that answer, put a circle in. I would suggest if you're on the third iteration of the question and you're still not sure, probably move on. Never leave one blank. You've got a 1 in 4 chance of guessing the correct entry. And always read the question carefully. My advice is actually to cover up the answers, have a look at the question and decide, whether you think either of those is correct, and before. So try and work out what you think the answer ought to be before you look at the possibilities. Okay. Now, in some questions, it is possible to spot the correct answer really quickly. In other questions, you will need to perform some calculations in order to arrive at the correct number. Okay, so let's start with this one then. Number 1, statement 1, an accountant is the only person who can complete the double entry bookkeeping. Well, we know that's not true. That can't possibly be true because bookkeepers can do double entry bookkeeping. Statement 2, if an accountant completes the financial statements for a business, they will be error-free. Well, there are no guarantees. Even accountants can make mistakes sometimes. Even I make mistakes sometimes. So the answer there has got to be that neither statement is true. So it is D. Okay, it can't possibly be any other option. Number 2, which definition best describes the accruals concept? Well, the accruals concept is about matching income and expenditure for a time period. So A, their income and expenditure are matched to the period. Matching is the key word there that they belong to. I think it's probably going to be that one, but let's just check the others. Income and expenditure are spread evenly across the year. Well, that's just nonsense. Only income is matched to the period it belongs to. Well, that's not true because we do accruals and prepayments for income and expenses. Only income is spread evenly. So the others are just nonsense, really. I don't see how you can possibly arrive at any of those. Number 3, which is the correct formula for the liquid capital ratio? Well, the liquid capital ratio is like the current ratio, which is current assets over current liabilities. But with the liquid capital, we deduct inventory from the current assets before we divide by current liabilities, because inventory is the least liquid of all the assets. So anything that's times by 100, it can't possibly be, because it's not expressed as a percentage, it's expressed as a simple ratio. Current assets over current liabilities is the current ratio. It's actually D that we're looking for there. Current assets minus the closing inventory divided by current liabilities. Okay. Which of the following correctly lists items to be shown in a partnership appropriation account? So remember, that's the bit that goes at the bottom of the income statement where we share the profits out. So things that would be appearing in there: interest charged on drawings, interest on capital, partnership salaries that have been paid, and then the eventual share of profits or losses. So anything that mentions drawings or capital introduced, we can't tick. So that rules out A and B. Interest on drawings, partners' salaries, share of residual profits. Yep, all 3 of those, but let's just check D. Interest on drawings, yes. Capital introduced, no. Share of residual profits, yes. So it has to be C for number 4. Right, let's move on to number 5 then. A business had the following expenditure: annual maintenance contract, actual cost of machinery, delivery cost, installation cost. What is the total capital expenditure? So obviously when we buy an asset, that is going to be capital expenditure, the actual cost. But don't forget that included in the capital expenditure is anything that we incur in getting the asset to the correct location and getting it into a usable state. So it's also going to include the delivery cost and the installation cost. So if we add those up together, we get 16,900, which is answer C. Number 6, a purchase ledger control account shows the following for April 2022. So this is the month of April. Be careful here because it's the balance owed to suppliers, not at the start, not at the 1st of April, but at the end of April. So we've got £1,600 as a closing balance, and we're actually trying to find the opening balance. So we've got credit purchases, discount received, payment to credit suppliers, and returns outwards. Okay, so what we need to do is we could do a purchase ledger control account. We could squash that in there. We don't know what the BAL BD is. That's a mystery figure. We do know purchases. So credit purchases, we debit the purchases. We credit the purchase ledger control account. So 14,200 on the credit side. Discounts received, reduce the amount we owe to the suppliers. So that will go in on the debit side. Credit to the discount received account, which is of course income. Payment to credit suppliers, we credit the bank, debit purchase ledger control account, 13,915, and then returns outwards are going to reduce the opposite of purchases. So returns out would be on the debit side, reduce the amount we owe to the suppliers. And then we've got, of course, the balance carried down, which is going to be on the debit side. Balance carried down was £1,600. So all we've got to do is add up the debit side, which clearly at the moment is heavier than the credit side, and find the missing figure. So 314, 1,600. So we've got 16,079 on there. We need to make both sides the same. So if we take the 14,200 off of there, that gives us 1,879. Let's look and see if we can find that here. Yes, we can. The answer is C. Okay. Number 7, we've got some information about the sale of a vehicle, the original cost, provision for depreciation. Remember, plus that minus that is the net book value. So in this case, the net book value is 22,000. Provision for depreciation taken off there means that the net book value is 12,375. We've sold it for 12,900, so we've made a profit on disposal of 525. It says, what is the income statement entry in the disposal account, not in the income statement? So read this one carefully. Obviously, we're going to be crediting the income statements, other income, we made a profit of 525. But the answer, as far as the disposal account goes, is a debit. And just in case you're not convinced, let me just show you the disposal account. So remember, we've got the cost of the asset coming out of the cost pool and going into the disposal account, 22,000. We've got the provision for depreciation going in on the credit side, 9,625. Disposal proceeds, presumably through the bank, debit the bank, credit the disposal account, 12,900. And then we need to find out which side. So we've got 22,000 obviously on that side, 9,625 and 12,900 means that this side adds up to 22,525, and the difference going off to the income statement is 525. So the answer has to be B there. Okay. This one, Alex, Maxine and Sergio were in partnership with profits shared on a 6-3-1 basis, respectively. Alex has decided to leave the partnership, fully withdrawing his investment. Following balances were available. So Alex had a capital account balance of 32,000. Okay, so he's going to get that minus a debit balance. So we're going to take the debit balance off 3,200. He's overdrawn on his current account. So he's going to have to pay that back. And there's also been an increase in the value of non-current assets. So remember that if there's an increase in the value, it's the old partners that benefit. So all three of these partners will benefit, but Alex is only going to get 60% of that. So we're going to add it on, but it's only 16%. So 15,000 times 60% is £9,000. So if we add the 32,000 minus the 3,200 for the overdrawn current account and add the 9,000, we get a balance of 37,800, which is C. Nearly there with the multiple choice questions. Number 9, Sue believes an employee has stolen cash from her business and she provides the following information. So we've got opening and closing balances, cash takings, and cash bank. So let's draw up a little cash account. Let's pop that in there. So balance brought down at the start is 635. Balance carried down at the end is 540. Cash takings, so cash sales effectively, are 18,000. Remember, we debit the cash account, we credit the sales account, and then the bankings, pay that into the bank. So debit the bank, credit the cash account, 17,850. And we just need to find the missing figure to make both these sides balance up. 18,635 on that side. We want both sides 18,635, 17,850 minus 540 means that the cash that's been stolen is 245, which is answer C. Okay, and then the final question, which error would be most which error would be the most likely to be prevented by the use of accounting software? Well, an error of commission is where something's gone to the wrong specific account. So it's still quite easy to put stuff to the wrong customer or supplier's account or the wrong expense account. So it's not that one. Partial omission. So if we use a computer, we shouldn't be able to omit one half of an entry. So I think the greatest likelihood is it's going to be that one. An error of principle is where we mix up perhaps a non-current asset with an expense, something we haven't followed the rules of accounting. So I think that's unlikely. We can still do that with a computer. And reversal. So the computer, we could still post something as a bank receipt when it should be a payment. So I think the answer most definitely is partial omission. We can't do just a debit with no corresponding credit. Okay, so that's the multiple choice questions dealt with.